If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. I tend to focus on the Chinese EV market and NIO, as I'm a NIO bull and investor. In today's episode, we're going to be talking about what's happening in the premium space in the Chinese EV market. So it's going to be a super interesting, super insightful video. If you're new to the channel, you already know what to do. Please hit that subscribe button. We're trying to get to 10,000 subscribers this year. We're almost there. We're almost at 8,000. I think we can get there within the next couple of weeks. So thank you guys. Whether you're new or returning, make sure you hit the like button. Make sure you click the notification bell icon. Leave a comment down below. All your engagement really does help us to continue doing research and get this content out to a broader audience, ultimately being able to serve more people. So we thank you for that. We thank you for your support. And without further ado, let's get into today's episode. You know what's crazy? Porsche, the brand that was once called irreplaceable, is now facing some serious headwinds in China. We're seeing a 28% drop in deliveries. But before we dive into what this means for the auto industry, let me paint a picture for you guys of just how serious this is. Imagine walking into a Porsche dealership in Yiwu, China just a couple years ago. This was once their highest selling county level store in the entire country. But now it's empty, closed, and it's not just Yiwu. Porsche is seeing closures across multiple stores across the entire country, and they plan to cut their distribution network by 1/3 in 2026. Let me break down the numbers because they tell a fascinating story. Porsche's global revenue down 5.2%. Operating profit dropped 41%. Automotive net cash flow plunged 63%. But here's where things get really interesting. Their operating profit margin is still sitting at 10.7%, not anywhere close to their target of 17 to 19%. Now you might just be thinking, Obi, this might just be a market downturn. That's exactly what I thought at first. But check this out. Retail sales of cars above 300,000 RMB in China actually increased to nearly 3 million units in 2024. So the market isn't actually shrinking, it's transforming. Let's dive into what's really happening here, the major shifts in the market. First, there's a changing definition of luxury. Remember when luxury meant a fancy badge and leather seats? Those days are gone. Today, premium buyers in China are looking for cutting-edge technology and user experience. This is where companies like NIO are truly crushing it. Second, we're seeing a shift in who's buying premium cars. The traditional Porsche buyer, think real estate developers, small business owners, they're being replaced by a new type of wealthy consumer. These are tech entrepreneurs, finance professionals, people who really value innovation over tradition. Third, and this is crucial, the price to value equation has completely changed. When domestic brands are offering similar or better technologies at similar prices, then the premium traditional markup becomes even harder to justify. Speaking of technology, let me tell you about what NIO is doing. We've already talked about this, but they've developed this incredible 5 nanometer chip, intelligent driving chip, AI chip, the Shenji NX9031. We're talking about 50 billion transistors on a single chip, 32 core super CPU architecture, and the ability to handle massive real-time tasks in parallel. This isn't just keeping up with the competition, this is leapfrogging them. But here's where things get really interesting. While Porsche is stuck in their ultra premium box, I say this all the time, but NIO is playing chess, not checkers. They're diversifying with sub-brands like Firefly and Envo from my viewpoint, for 3 brilliant reasons. It reduces their exposure to any single market segment. It allows them to capture customers at different price points. And most importantly, it creates upgrade paths within their ecosystem. Let's zoom out for a moment though and look at what's happening in the broader industry. Talk about BYD. They just launched the world's largest car carrier, the BYD Shenzhen. It has a capacity for 9,200 vehicles, and this isn't just about shipping cars. It's about scale and confidence in the future demand. Also, we can't ignore what's happening in the chip space, of course. The semiconductor landscape is completely transforming the automotive industry. A traditional car needed 600 to 700 chips. Today's electric vehicles need 1,600 chips. And when we're looking at advanced smart electric vehicles, we're talking about up to 3,000 chips per vehicle. Now let's connect the dots. What we're seeing isn't just about Porsche struggling or NIO succeeding. It's a fundamental shift in what premium means to the automotive world. And this shift is notably happening across three different dimensions. Number one is technology integration. Premium isn't just about mechanical engineering anymore. It's about computing power, software integration, and user experience. Two is brand perception. The new generation of wealthy consumers isn't just going to gravitate towards European vehicles anymore. They're more interested in the functionality of a car. What can a car do instead of the badge that it wears? Then, of course, there's the price-value relationship. The premium segment is being redefined by car companies that can offer cutting-edge technologies at more reasonable price points. Looking ahead, I see this transformation accelerating. Traditional companies really have three choices. Number one, adapt and embrace the new definition of premium. Two, double down on their strengths and become niche players. Or three, risk becoming irrelevant in key markets like China. This is why NIO's strategy is so fascinating. They're not just competing in the premium space, they're redefining it. Their chip development shows that they're serious about things like technological innovation and leadership. Their sub-brand strategy shows that they understand market segmentation. And their focus on user experience shows that they understand what premium buyers want. But let's talk about some real numbers that show this shift. When Xiaomi launched their SU7 Ultra at 814,900 RMB, they got just 3,680 orders in just 10 minutes. That's roughly equivalent to Porsche's monthly sales in China. The market is telling us something very clear. The definition of premium is changing. So what's the bigger picture here? The automotive market, the premium automotive market in China isn't dying. It's evolving. The winners are going to be companies that understand these three things. Technology is the new luxury. Brand value must be backed by real innovation, and market segmentation is key to sustainable growth and weathering the storm. This transformation isn't just about cars, it's about how entire industries can be disrupted when consumer preferences shift and new technologies emerge. Traditional brands like Porsche are learning the hard way that no brand is truly irreplaceable. This is all happening while companies like NIO are showing us what the future of premium could potentially look like. Anyways, that's it for today's episode of the Courtside Financial Podcast. Happy Sunday. I hope you found this episode useful, insightful, entertaining at the very least. If you found it to be any of those things, make sure you hit the like button. Make sure you leave a comment down below. Click the notification bell icon so you don't miss out on any content. And if you're new to the channel, help us out. Hit that subscribe button. We're trying to get to 10K this year. We're going to get to 8K pretty soon. So we appreciate all your help and your support and just showing up for the channel and helping us push out this information to a broader audience. Anyways, enjoy the rest of your weekend. Enjoy your time with family. We will catch you in the next installment. This is Obi with the Courtside Financial Podcast. Thanks for watching. Bye.